All right, John. Let me date stamp this. Today is Thursday, September 20th. And for people that listen to me, they know I put this on my Substack early for my paid subscribers, and I put it out publicly. So I put it out publicly tomorrow. And I said to you, should we wait to put this out wait to record because we have one more day in the market tomorrow. And I mean, maybe it's me. Like it feels like things are, they're really. I mean, today was. Here. Let me push it. Let me ask you. Was today a big day?
Today was a huge day because it was an intraday market reversal, and it was a bad market reversal because we were up almost 700 points at one point. The reason I fear that tomorrow is going to be a nothing, we're only going to have, I hate to use this phrase, serious traders until about noon tomorrow. Being so, it's a holiday week next week. And if you have money, you're not going to hang around New York. You're not going to hang around Wall Street. You're going to close your affairs. You're going to leave at noon, and you're going to call it a week. So whatever happens after tomorrow at about noon, 1 o'clock, barring something falling off a cliff or NVIDIA filing bankruptcy for some reason tomorrow morning, I really don't see tomorrow to be a major earthquake of an event. And it would take something happening in Japan, in Asia, or in Europe to trigger such an event.
So let's back up a second because Nvidia came out with their earnings yesterday, and the earnings were strong. And I'm posing all those questions to you for people that are going to be listening and watching here. The earnings were strong, correct?
Correct.
But people like Jack Gamble and others were saying, let's see what the market. Michael Gayed, I believe Ed Dowd. Let's see what the market ends at today. The market didn't end positive. It was almost down 400 points, which really in the grand scheme of things for the Dow is not that big of a deal considering how high it is, right? This episode is brought to you by Vaulted. Launched by McIlvaney Financial Group, with Vaulted, I literally just tap a button and bam, I own physical gold stored in a professional vault. I can also take delivery at any time, extremely simple and less expensive than any other method. The do-it-yourself way to buy precious metals. Click on the promo link in the show notes or go to vaulted.blbvux.net/coffeeandamike. I mean, look at how easy this is. The Vaulted app on my phone, I can access it at any time.
It's not a big deal at all. In fact, if anything, it's proving that the market is simply in a process. We've had a topping process for several months. Now we're in the process of discovering new lows. And that process is going to take probably another month. And we're at a very dangerous point because we really only have 3 more weeks of trading after Thanksgiving. And then it's total gamble from there. No one knows what's going to happen, especially with the Federal Reserve, especially with the president's instability as far as policy goes. And when you add all of this together, we have a major holiday starting in December after the 12th, and that's Hanukkah. And a lot of people think, well, you're showing a predisposed bias. No, I'm not. Realistically, a lot of Wall Street traders take that week off. And until the 23rd, nothing much is going to happen. A lot of people start taking vacations. They disappear. They call it a season. Santa Claus will show up at some point in December. We just can't say when. And that rally, depending on how thin it is, will probably be the end or last attempt at a top. This particular week coming up is going to be somewhat turbulent. It does have a risk of a major sell-off between now and next Wednesday. There's no doubt about it. Am I expecting a crash? No. Am I expecting some major change in market sentiment? Yes. And historically, it's happened before. A lot of people forget what occurred in 2018. But we started seeing what happened when liquidity got squeezed. And we saw what occurred when the markets couldn't get that easy money they were looking for, and the financial institutions started reporting problems. What are we looking at now? We're looking at excuses for why the market is performing poorly. We're looking at excuses as to why we're seeing a rotation out of the Mag 7. If the Mag 7 collapses, which it looks like that's begun, you will see the rest of the market go down the toilet with it. And it will happen so fast, most people are not prepared, especially the young retail trader, the ones who are not historically aligned with what's happened. We have a lot of people, a lot of green people on Wall Street and behind their computers at mom and dad's basement who have never experienced a true bear market. Everyone looks at '07 and '08 and says, well, that was mom and dad's market. That wasn't ours. They forget about 2000, 2001. They forget about 87. They forget about 1967 through 1982. They don't understand that history is something you have to use as a guide or you will get burned. And on full disclosure, I'm out of the market. 100% out.
I feel like you're describing the young people in that regard. It's like they've never been punched in the face before in terms of the market. And so they think that they're going to be able to avoid this. And this to me is unavoidable, correct?
Correct. Market's correct. Markets have bear markets. It's part of the cycle. We have to flush out the weak hands. It's part of the cyclical nature of capitalism. The idea of picking winners and losers is something the market should be doing, not the government, not financial media, and of course, not hedge funds who are gaming the system per se to influence people to buy stocks, crypto, commodities, et cetera. We have a lot of people who have been investing in things they do not understand that do have high risks. The discussion of CDS has come back up again, a subject I thought we had buried 12 years ago. And instead, it's coming back to the forefront of the news because people are buying insurance on bonds that they feel are risky. And that debt that is risky is mostly focused around the AI boom and the chip industry. That should scare some people dramatically. I mean, this was supposed to be the invincible new industry for the world. And here we are now buying insurance on it collapsing. And that insurance, if it comes into the money, it means we're going to have a far more severe recession than a lot of us had predicted.
And for those who don't know what CDS is, credit default swaps.
Basically buying insurance on a debt. Pretty simple. We'll simplify it down to the level of the Big Short level so people can understand it. You see a house, you see some sparks. I'm going to buy insurance on that house. And I'm going to sit there and cash in on that house burning down if it burns to the ground. Well, I have insurance for it, so I'm covered. Well, if the bond defaults and is unable to make the payments whole, I have insurance, which will make me whole. The unique situation this time is that it's not through many of the major insurers or banks. It's private equity issuing the CDS, an unknown, unregulated quantity. We no longer have the so-called non-financial banking institutions, NFBIs, are the risks that no one can account for. It's a new territory. And I actually heard an economist on Bloomberg this morning, and it really rubbed me the wrong way, saying, we don't have the kind of risk like we did in '07 and '08. But here we are talking about the banks who loaned the money to the companies and to the hedge funds and private equity that developed this speculative bubble. Well, if the banks have to pay out on this at some point in time in default, it will cause impacts on Main Street. I don't care what anybody says, large or small. The major banks this time, what's unique is they're isolated. They're out of the picture. They're too big to fail. They're protected. You won't see a JP Morgan at risk or a Morgan Stanley. You might see one other one. A lot of people have been speculating about Bank of America. There's a reason for that. They made a lot of risky bets. But you won't see the kind of frenzy with the large banks as much as you will the community and regional banks. This all comes back to we're gambling on an unknown industry with an unknown return and loaning money to people who have not demonstrated an ability to turn a profit yet. That's pretty scary.
Here's what I don't understand about the credit default swaps in this case, because when you go back and look at the Big Short, one would think that the institutions didn't realize what Michael Burry was doing when he came to them with this idea. But wouldn't history have taught that you wouldn't want any part of this? So why would private equity even participate?
To encourage more investors to give them money to invest in startup companies, to become the next NVIDIA, to become the next great thing. even though it's an unproven industry. I mean, can anyone demonstrate at any level what the purpose of OpenAI is as far as a spell checker and writing papers for high schoolers?
I don't mean to laugh, but I mean you simplified it, so it's a perfect summary for it.
I mean, let's take a quick reality check. Target reported disastrous earnings yesterday. Their their statement was a nightmare. It showed they're behind the curve. They didn't keep up with Walmart. They didn't keep up with Amazon. Fine. What's their answer? We're going to invest more in AI, and we're going to bring OpenAI to help us. So a company that has not made a profit is going to help a company that is having trouble making a profit. I might seem a little old and naive, but someone explain the logic in bringing someone in who hasn't made a profit to help me make a profit. I'm really having a hard time wrapping my head around this. And it shows the extreme lengths that we've gone to in this bubble. And I don't care what Wall Street says in the media. I don't care what the mainstream media says. It is a bubble by every classic definition, whether it's the dot-com, housing, etc. We've managed to make this everything bubble far worse than it ever needed to be.
You know, I've had Melody Wright on here a bunch of times, and I don't know if you've ever spoken with her before, but she, she pointed out one of the things she said in regards to AI that it was a smokescreen for how bad the labor market is, and it's just easier to blame it on AI than rather than say, the job market sucks.
Mm-hmm. Her and I go way back, and we've chewed a lot of the same real estate. I got my bones back in 05, 07. I started writing and speaking about the problems with real estate in Southwest Florida and Central Florida. And then I ended up on radio, quite by accident, nothing I looked to do. Somebody said, "Hey, you want to host our Friday night show?" I said, "Sure, no problem." Then I started getting contacts within the banking industry and expanded on that and talking about the stories that occurred. When you look at what we went through in that period, you would think we would have learned our lesson. But as Melody said, AI is an excuse. It serves no practical purpose as far as improving profitability other than on the edge. Great, I might improve 1/3 of 1% by using some of their tools, but it hasn't demonstrated an ability to fully replace all of the aspects of the human workers. I've encountered the AI. I've dealt with insurance companies on the telephone. I'm sure you have too. I've had to deal with one when my late mother had problems, and I had to deal with the insurance company, and they were denying claims. The computer was, the AI was, believe it or not. For an example, they suddenly said that her doctor is in Maine, light years away from where she lives. And we said, no, she's had the same doctor for 20 years, blah, blah, blah. Went through the process. No, claim denied. Why was the claim denied? Because the AI had an assignment to pair costs. And the company is being sued for that now on a national level. It's a big lawsuit. I won't name the company. I won't name the lawsuit, but what has happened is people are using AI as a crutch and an excuse for problems in their industry, but they're also using it as a cover to lower costs. Melody is spot on. It's a crutch for saying, okay, well, we're going to institute AI, so we need to shave off 2% of our workforce. Okay, sounds reasonable. What does the AI do? Well, we can't talk about it. It's a corporate secret. I mean, it's the most absurd process that I've seen in my lifetime, but it's no different than any other major recession. They're using that as cover to say, look, we're modernizing, when in reality, that tool hasn't matured enough to replace the human element. Thus the scream for H-1Bs, thus the begging for lower cost imported labor via legal immigration channels. It's a conflict that's going to cause a lot of problems in the next 3 years in this country. And society is not up to it. They're not ready for this conflict head to head. I really believe that the K shape of our economy, which I've been preaching about for a long time now on the radio and through my pages, we're about to see this come to a head. And the implications are that when the upper 20% and soon to be just upper 15 or 10% as conditions slow down, still have a good standard of living, but the lower 80 to 90% do not. Political and economic implications are unavoidable. And that's where the danger comes in, not just for the economy, but for the political structure of the United States as a whole.
So what is your crystal ball out right now? Where do you think this is going in the next 3 years?
Right now, I think we're going to see a lot of financial disruption over the next 6 months. The quote unquote one big beautiful bill will start throwing money out to everything and everyone about next April, May, if the projections are correct. The impact of the Federal Reserve rate cuts of the FOMC will not start hitting the economy until next summer. That might salvage the midterms for the Republicans, but I'm highly skeptical because they do not seem serious about wanting to return to capitalism. In fact, the most terrifying aspect of what I'm seeing right now is that we're using the so-called public-private partnership as a cover for something that's been around for almost 100 years, and that's corporatism. Most people fail to understand that concept, but it's not an American concept. It was admired by America. FDR wanted to implement it on a massive scale. But the originator, Alfredo Rocco, an economic advisor to Benito Mussolini, wrote extensive papers about how the state needs to nurture, support, and invest in private industry to boost the economy as a whole. In other words, pick winners and losers. Now we're carrying this to a modernized version, trying to copy the Chinese version of this and say, yeah, this will work in America. It won't work in America. We're picking winners and losers at the state level, the federal level, not through the marketplace. And once people lose that choice, once we lose that freedom, all bets are off. People will either start voting for the extremes, more populism, more socialism, or worse, a third alternative, which has yet to be determined.
Yeah, and this is what I wonder in regards to, coming back to AI and tech for a second, because everything seems, and I say this all the time, and I have to repeat it. Like people think we're living in a superhero movie with all this, like good guys, bad guys. Yeah. But and it's a football game, right? We're in the fourth quarter, blue, red. Every election is the biggest election of our lifetime. Yada yada yada. I'm so tired of hearing that. I'm already starting to hear it for next year in the midterms. But you look at some of these characters, like what's his name from Palantir, the CEO. He looks like the mad scientist, Alex Karp.
Oh, Karp's terrible.
He looks like a scientist. So he looks like a villain out of either a Marvel movie or a James Bond movie.
Well, take a look at Alex Karp, what you just said. Here's a prime example. What would his company be doing without massive government support and these contracts? It would be not as large or as strong or trading at absolutely obscene PE ratios. And when I say obscene, I mean off the charts. I'll pull the chart up real quick while we're talking. When you see a company trading at a PE ratio of 362, you say, okay, well, to the average person, so what? But to someone who invests money or speculates, etc., that's an absurd level. You're looking at saying, okay, so we're going to get 30 years worth of earning production in the next decade. It's not going to happen. It's not realistic. And everyone forgets the history of the United States. We all gravitate to the newest and greatest technology. I don't know how old you are, Michael. I'm going to assume you're a lot younger than I am. But
47.
The 01,
47.
Oh, you're okay. So you were around for the start of the dot-com bust.
Yeah, but I was 23 and,
Yep, exactly. None of us were responsible. Trust me, I was 23 and in college. It was not something I would focus on either. But what most people forget is that we all thought that everyone would use pets.com to have pet food delivered to their front door. We would all be on Netscape 20 years later, and AOL.com would be the portal to the universe. Where are we today? Gone. All of them. The technology rotates. The big technology that everyone forgets about, 1929. How many people still use Radio Corporation of America products? I don't have any. I have some collectibles, but RCA, it was number one. It was everything. Everyone had an RCA radio in their house or a Westinghouse. You don't have the products because technology evolves. So the people who are gambling on Palantir, NVIDIA, et cetera, are all saying, we're going to be the future. How many people are using Commodore 64s and TI PCs? No one. It's cute to look at and set up and show your kids, but do people still use this old technology? No. Technology evolves. Economies evolve. The problem we're having in America is we don't want to let our economy evolve in a capitalist manner. And that brings the conflict to the forefront. And that's where I think we're going to see happening with these companies. AI is a great catchphrase. Fantastic idea. Every time I've gone to one of the AI queries and tested them, it is terrible at logic. It is average at best on history, and it is horrible at interactions with humans. Those are three key things that you need: the human element and the intellectual ability to proceed. It doesn't work the way they're advertising it. And I think that's going to be the fall. The LLMs are not ready for prime time. And the AI products that are being rolled out are simply to sit there and plug and play and supposedly eradicate the need for humans. I've seen no evidence of their capabilities yet that proves on a corporate level it will help the company expand and survive. They've really got to fine tune this. So right now it's an excuse. It's a cost-cutting excuse, as Melody said. And it's a reason we have to be deeply concerned that this quote-unquote excuse will be turned around when you terminate 200 people at Disney. Happened here several years ago. Big deal in Florida. All IT workers. And what were the IT workers told to do? They were told to train their H-1B replacements. Massive controversy in the state of Florida. What's happening now? We don't tell them that. We simply say you're being let go for AI. And then we bring some of the H-1B workers in to work on the AI programming to install the system at the companies. It's a nightmare, and it will have societal implications as this moves forward. You're reducing the standard of living for the citizens to improve corporate profitability. At the same time, you're having the government pick which companies it wants to be profitable and survive this cycle, creating unfair competitive advantages. A very, very dangerous formula.
Well, and to your point, I feel like the government won't let these companies fail. I mean, would you put X is in that category? Palantir, OpenAI, NVIDIA, who am I missing?
X is not there.
No?
It's not crucial to defense. No, Google is long time ties to the CIA and other NSA, especially.
Yeah, what does Google do? I mean, what do they do to warrant this type of valuation? Like,
they actually have some very good products that are used with the Android system, with other things. Their telephones are competitive. The bigger issue is they provide a lot of data transferability and information that's easy to absorb from numerous sources. The original purpose of DARPA and many of these other projects, it brings it into the mainstream for the government. They're very, very big with the NSA. Now they've backed off of them. They're not as big as they used to be, but they're still tied in. No one's going to deny that. They're still tied in many ways. Maps, it's become the universal standard for everyone. Well, if I can look at a map, track myself on it, so can everybody who works for the government. That doesn't take rocket science to figure that out. It also makes it easy to market your data. And they focus more on data marketing and farming than anything else. Why do you think their email's free? Because they can farm your email, see what your likes and dislikes are, your shopping preferences, who you talk to, where you want to travel. They can sell that to companies. It's a fascinating prospect, but it works. Do I like it? Not thrilled with it. Do I have a choice? Unfortunately, a lot of platforms I deal with use Google. That does make it different, and it makes it difficult to deal with them. But the winners and losers are going to be chosen by who the administration is at the time. X right now is safe only because they have to have SpaceX. You have to have a lot of Elon's products. And Elon is doing a great job setting himself up for the future. He just has to execute. SpaceX pulled it off. 100% win. Watched the launch this past weekend while I was in Orlando. Beautiful to see. X could be a lot more. Could be a broadcast platform in addition to a social media site. He hasn't put the money or investment into it yet. Tesla, it's up for debate. People are no longer driving Packards. So there's no guarantee that Tesla will survive. Do they think they will? If he keeps up with the Joneses, yes. But the problem is the cost of EVs have not come down far enough for the average family to sit there and invest the money for a charger and everything else. Excuse me for a second. Don't have a cough button when I'm doing this, so I apologize for that.
Oh, sure.
But the problem is that you have to bring the cost level down, not just for the upper 30% of America. You have to bring it down to the lowest 70% of America and make it attractive. That's why you still see people driving Japanese cars, Korean cars in the masses, because their quality is decent. The durability and survivability is long term. We still have questions about EVs, and that's why American automakers are getting shut out. So X, yeah, it'll probably survive for a while as long as Trump is president. But let's say a Newsom, God forbid, were to win, or my fear, Shapiro emerges as the candidate for the Democrats, then you're going to have a problem. You will see new introductions of censorship and market moderation and so-called equality standards that will be implemented across the board. And that will stretch beyond technology, but across industry as a whole. And that's what happens when you start initiating the kind of power grabs and economic management that we've seen the last couple of years, this past year, and spread it across the economy. Corporatism is a very dangerous tool. Works great when your guy is in charge, works horrible when their guy is in charge. And that's what everybody's criticism of FDR was. He wanted corporatism at a massive scale. The NRA, National Recovery Act, was a prime example. Trump is initiating the same kind of program with 10% investments in companies that probably don't need the money, or if they were strong enough or had enough innovation, could stand on their own and be bought by someone else. No one has explained to me yet what the 10% investment in Intel purposes is. Quote unquote, national defense. Sounds good on paper. But why? Why aren't they being bought out by a bigger company? If there was value there, another company would buy it and begin production in the United States, a Micron or an AMD. There's no value there. So the government's bailing them out to keep them in the game for what purpose? Government chips? Why? They can get as many as they want from NVIDIA. They can get as much as they want from AMD. There's no logic from an economic viewpoint as to why we're setting policy the way we are. And the danger is when people see through that, there's not enough exit doors in markets for everyone to get out. So that upper tier of individuals can look at this and say, okay, the game's over. I'm out of here. And they're trading in what's called dark pools or off-market participation. More than 50% of stock trading occurs outside of what you see on the media. It's not the New York Stock Exchange or the NASDAQ. It's private. It's other markets where only the very wealthy can participate and play. We don't have access to those markets. We don't see the price levels that are being set until the regular stock market's up the next morning. I remember sitting in a boat in the Caribbean when the October crash occurred in 2008. And I looked and it said limit down. I said, that's going to be a fun day tomorrow. Let's go get some beer and go throw some bait in the water. It was great for me because I'm sitting here relaxing. But the reality was that the average small mom and pop investor, the retailer, the 22-year-old in his shorts in his mom's basement. I hate using that example, but it's been worn out. We might as well keep up with the Gen Zers in that method. They never have seen that kind or level of panic before. They think that the government is always going to be there to bail them out. Well, we've set that example the first 10 months of this year. Somebody is going to bail somebody out. No one ever has asked the question, what happens when that bailout doesn't occur?
Well, my friend Dave Collum refers to the complacency bubble, right? Where you think the system is going to save you rather than the system is what's causing the downfall.
The design.
You cut out a second. You cut out a second. John, what did you say?
Oh, sorry about that. I said it's a design flaw, but it's not a design flaw. The truth is that the Federal Reserve's original intent was to sit there and have a culling of the herd. You take profits over periods of time, and you have small cyclical downturns, and the Fed levels it off and prevents a crash. The Fed is an antiquated animal. It's way out of its element right now. The financial system's evolved. The Federal Reserve hasn't. Our banking system has not. When you start looking at the larger picture, it's not just complacency. It's laziness. It's an absolute astonishing amount of laziness, intellectual laziness in our society at this point in time. We see it every day at the grocery store. People who can't make change in their head, people who don't know how to sit there and function with basic cash or money, people using buy now, pay later for a pizza from Little Caesars. And you think, that's the stupidest thing I've ever heard. You're going to make 4 payments for an $8 pizza. Well, they invest the same way. They think, well, I bought this coin named after a bodily function meme coin, and it's the future of commerce. Well, how many people have you seen accept fart coin at the grocery store? That would be 0. And people think this is the greatest thing in the world, but I've got 1 million of them because I paid 1/1000th of a penny for that particular coin. It doesn't work that way. It's a speculative bubble. Same as speculative bubble, South Seas, 28, 07, et cetera, et cetera. We haven't changed at all as humans. We simply sit there and say, well, everything is either a bubble or people are complacent, et cetera. It's laziness, intellectual laziness. And we're causing a problem that does not need to exist and about to make it substantially worse, because the belief that the government will come to the rescue has not been tested in 40 years, almost 40 years.
I want to shift for a second. I want to come back to AI, but since you started talking about the meme coins, I want to get your thoughts on what's going on in Bitcoin, because that's another one of those markets where, and I've had people on that are, huge Bitcoin. I still don't understand it, and I've had people try to explain to me like I'm 5 years old. I ask questions about it. I get answers, but they're never the answers that I really think pertain to my question, but they always have answers for it. You've seen the decline of it, and some people I'm reading on X are saying that's it, Bitcoin's over. Other people are saying, it's just a little hiccup, but it's going to go back up and it's going to exceed where it was before. What are your thoughts?
From a technical perspective, I believe if it breaks below 75,000, we're going to retest the lows. We'll get back below 50 pretty quick, just from a technical perspective. From a practical economic perspective, Bitcoin is too slow for daily transactions. It doesn't prove its functionality in any way, shape, or form. The president of El Salvador was brilliant. He bought it low. He's been selling it high and investing in gold and other hard assets. Granted, he still has some, but he's still making money. The wise choice in this, though, is to sit there and get into hard assets. I'm a gold and silver bug, have been for all my life. Had it explained to me a long time ago and said, okay, this is logical. It's holding value. Let's look at Bitcoin. It's not being used for transactions, except on the fringe. You see Ethereum, supposedly the future, yet to see it evolve into a practical, everyday functioning currency, quote unquote. Ripple, same situation, no functionality in the retail marketplace. The government wants to go to stable coins. Okay, great. We passed the act for stable coins, the quote unquote stable coin act. So you're basically going to give me a digital token equal to $1. Isn't that the same thing I have in my bank account now? So what's the purpose? I don't make interest on it. It serves no purpose other than what I get with my credit card. We haven't seen a practical implementation of cryptocurrency at any state or local level. By state, I'm talking country, where it works as a functional replacement for currencies. And the one thing central banks do not allow to happen is a replacement for their monopoly. They want to have a monopoly on the currency. Well, great, no problem. But what about gold? Well, gold is a universal currency long before Bitcoin came along. It's just a lot heavier to transport. and take it across borders. Basically, everyone said, well, then that makes Bitcoin digital gold. That would be great until you sit there and understand that you still have to convert it at some point through a bank and pay taxes on it. A lot of the younger generation found out what capital gains were when they sold out and made profits. Hey, I got a Ferrari. Did you pay your taxes on your profits? I got to pay what? Yeah, they get shocked. Mr. IRS is very good about collecting his money. Trust me on that one. So when you start adding up everything that's happening with the cryptocurrency world, it's turned into nothing more than another bubble, another distraction, but it attracted the younger generation and it stirred their imagination. But from a practical standpoint, it has no purpose. And when it rolls over, it's going to go down hard again. This time, because I don't think the government's going to try and bail out every asset, crypto's in a lot of trouble. And would I be surprised to see it down in the 20,000s again? Bitcoin? No, not at all. Not in the least. Would I be surprised to see it rally back up to 150,000 again? Not at all. It all depends on what the government decides to do. At this point in time, they have a bigger fire to put out, and that's called the Treasury market and Japan. And that's where things will be sacrificed to allow the rescue of bigger things that are systemic versus Bitcoin. It's not a systemic value. It's not a systemic currency. So if anything's going to get sacrificed on the altar of capitalism, it's going to be Bitcoin and all the meme coins that go with it, all the NFTs, and all the companies that speculated, like Michael Saylor.
So you exactly where I wanted to go with this, and in regards to Japan. I mean, I had known as just Dario on X on yesterday, and we were talking about the carry trade. And what is the threshold if it hits 160? Right? Am I saying that wrong?
160. We're almost there. We're at 157 tonight. And
can you explain what that means? Not to interrupt you, John. Can you explain what that means for people that, I mean, for myself and others that don't know why 160 is such an important number or what it is?
It's the theoretical number that the Bank of Japan will be forced to intervene and sell dollars and buy in to support the currency. The problem they have is they can't afford to do that without impacting the carry trade. So as Dario has done such a great job outlining and defining online on X and everywhere else, he is a great interview. I enjoyed talking to him myself. You look at what's occurred. Japan's situation is higher inflation, higher bond yields, but are they historically high? No, they had much higher yields in 20, 30, 40 years ago. I mean, we're basically normalizing Japanese long-term bond yields. Is the velocity of those bond yield increases scary? Yes. A higher Japanese bond yield, but a lower valuation on the yen means people are getting the hell out of the Japanese market. Plus the instability that's been created with Takechi's statements towards China should scare the hell out of everyone, because that's not a war that's going to go hot, but economically it could cause great pain for the Japanese economy and introduce further weakness. In other words, a stagflationary scenario. At 160, it's believed the Bank of Japan will interfere. Do I believe they'll interfere? I don't see a choice. Will it be of any duration or help? I don't think so. I really see a threat of the Japanese yen trading between 170 and 200 before next year is out.
What does that mean then when it's trading between 170 and 200 for people of, regular citizens of Japan, and how will it impact the rest of the globe, and most importantly for people in the United States?
In Japan, highly inflationary. Their currency is diluted. It's becoming weaker and weaker. Normally, in the days when their demographics were younger, it was not a big deal. But now the demographics are mostly an older population with a diminishing younger population. Tell me if this sounds familiar in the United States. And we're sitting here looking at what's occurring, and Japan is under the same dual threat America is, except we have the world reserve currency. The problem for the United States, they're one of our largest bond purchasers. If Japan has to buy more Japanese securities to support the yen, they can't buy U.S. treasuries, and they will liquidate them. And we've seen cyclical rotations out of treasury bills. on an almost weekly basis, once or twice, sometimes 3 and 4 times a week, where they sell our short-term debt to eager American buyers to sit there and get dollars and settle dollar-denominated debts inside the Japanese system. It's a unique problem. Dario did a really good job of outlining the risk to this. It's mostly focused around their insurance companies, which are having to pay out more now as the demographic situation worsens and the older generation dies off, and also for their industries. They put a lot of emphasis on building in America, becoming quote unquote good partners. They're very practical individuals when it comes to industry, industrial development, and spreading around the world. You go to other countries and you see Japanese vehicles we never see here. They look to sit there and build what the world wants and let the American factories build what Americans want or are forced to buy due to regulations. And you understand we're really not as open a capitalist society as other locations dealing with Japan because, okay, there's cars I haven't seen from Japan in 20, 30 years. There's cars from China I haven't seen before. I haven't seen an MG in decades. I go to Mexico, there's MGs everywhere. Chinese company, the old MG midgets, but now evolved into a small car company. I see Japanese cars, Isuzus everywhere. When was the last time you saw a new Isuzu in the United States? Not for a long time, mostly in the medium and heavy truck industries. What's happened is they're designing their export markets to feed the world and designing their American markets to feed the Americans. But if we become too expensive to compete in our own shores, it's going to impact their ability to buy our bonds. And that's going to cause our yields to go up at some point, and it's going to cause the price of our debt to go lower until we get quantitative easing, another subject entirely.
Do you think then, is this the most important of what we've touched so far in regards to NVIDIA, the AI bubble, Bitcoin, and the carry trade? Is the carry trade the most important story out there right now?
Yes. Carry trade is number one, and number two would be the everything bubble in the United States. The belief that it cannot happen here again or it cannot happen there again is a fallacy, in my opinion. We've had decades of financial mismanagement from the Bank of Japan and the Federal Reserve, from the United States government and the Japanese government. It's all been very nice hand holding, one giant circle jerk. I'm sure you've heard Rudy Havenstein talking about this in the past. When the central banks think they have a policy that is functional and can be translated across the entire world and they can impose it at will, be it militarily or economically, hey, we own the world, no problem. When the world says we've had enough of this and we're shifting from a bipolar or unipolar world to a multipolar world, it changes the economic structure of the globe. And from a historical point of view, I think we're in that 1930s paradox where everyone thought the United Kingdom was the greatest power in the entire world. No one would ever unseat them. Nothing could ever happen economically to destroy that nation. 15 years later, the United States is the largest power in the world, Russia, the second largest power in the world, and the entire world's been laid to waste. Are we going to have a world war? No, that will not happen again. Will we have conflicts to settle scores economically? Yeah, that's a distinct possibility. But I don't see a mass conflict between the two big boys in the room, China and the United States. I honestly believe it's going to be fought economically. And I think that we're so far behind the curve because of what we've allowed to happen in the last 2 decades. We're going to take the bloody nose. And it's going to take us a little bit longer to recover than a lot of other countries. Same for Japan. The carry trade is crucial because it allowed the circular financing of our bond market. That fails, all bets are off.
Which almost happened last year, and they were able to, stitch it up and keep limping along?
It was panic buying. It was a panic move by all parties to sit there and say, okay, we've got to fix this immediately. The end result was that people started sniffing around the Japanese markets. A year ago, were you talking about the Japanese markets? Not much. Neither was I. It was more focused on American real estate, the political economic implications of what's happening in our markets. Now we're watching the Japanese yen currency and we're saying, wow, this is suddenly a feature we have to start paying attention to. And the yen has done nothing but deteriorate. Now, right now, tonight, it's strengthening. Well, probably something has been said. I haven't been paying attention to my news feed, but we're still over 157. We get over 159, 160. And keep in mind, we have holidays. That's going to allow a lot of freedom for the Asian markets to move, whereas we're not going to move as much. And that is where the backdoor scare comes in. After Thanksgiving, the 2 weeks after Thanksgiving are probably two of the more dangerous weeks for our markets, in my opinion. And I think that that's happened before in 2018, and we're going to run into that again now, be it a currency crisis generated from Japan or a domestic crisis initiated by all of this nonsense we've seen with non-financial banking institutions starting to take down regional banks. I mean, this week, did you know we had a credit union failure?
I did not.
Small one, just $7 million, but we had another credit union failure. What makes it interesting is what is the primary target of credit unions? They lend out to car loans primarily. That's the biggest deal. Not housing, but cars, consumer loans. So when you start seeing those start to trip, everyone says, well, what happened? I said, you couldn't shut anything down for 2 months. The government was shut down. So all of the bureaucrats responsible for auditing, monitoring, and shutting these institutions down have been on vacation. Will we see more bank failures? I project we'll see 2 or 3 before the year's out. Will they be big ones? Probably not. Will they be notable? Yes. Watch the geography. That's the key. Another example, and I write about this on my blog all the time. How many people know that Harvey, Illinois went bankrupt? Small suburb outside of Chicago.
You were writing about that today. You were writing about that.
I wrote about it. Yeah, yesterday. Yeah, I wrote about it, and I caught it from the Chicago Tribune a couple of weeks late. They can't technically declare Chapter 9 bankruptcy. They declare their city in financial distress, and the state takes over their finances. Well, what was the key to their stress? Well, they had a dramatic decline in population over the last 2 decades, and their property taxes went up, making it unaffordable. So people just quit paying their property taxes. How many communities is that going to happen to across the United States if the economy slows? The little things that people don't pay attention to, these little stories, they add up. California is having that problem. Illinois is having that problem. We probably have a few in Florida that haven't popped into the news yet, although our state does a pretty good job of trying to securitize and protect those cities and communities so they don't impact the state as a whole. But as the economy slows down, these stories are going to become more pronounced. Melody did a great job analyzing what happened with the homeowners associations, homeowners insurance, and the decline in housing prices. But I look forward to seeing her hopefully early next winter down here. We're going to review some of these high-flying communities we have in Southwest Florida. And what we're seeing is houses that were selling for $600,000, $700,000, $800,000 are down $100,000 to $200,000 in price already and still declining with no bid. Well, somebody has to make up the difference in property taxes. The difference for a community where it was collecting property tax on a home assessed at $600,000 versus $400,000 is dramatic. And it forces cuts in government, which forces more unemployment. And of course, as the saying goes on Wall Street, selling begets selling. Well, firing begets firing. It snowballs. So at some point, we have to reach the old equilibrium or establish a new one. In my opinion, all of these factors that are occurring right now are beginning, and they're beginning to accelerate. So pay attention to the little stories as well as the big macro stories. Don't just focus on what's ever on the financial television networks. Look at the smaller stories that are happening under the surface to understand the K-shaped economy is real. You saw that Walmart reported massive earnings today. I'm sure you saw that story float through the news. What most people don't understand, a lot of that is based on inflation. And if you believe the inflation numbers that we're hearing, it's only 2 or 3%. No, it's probably a little bit higher than that, especially if you go to the grocery store, you understand that concept. But Walmart modernized, Target didn't. There's the difference in earnings. They were prepared for a consumer that was strapped. Target didn't do that. Macy's tried to a degree. It's having trouble. How many people talked about the potential bankruptcy of Saks Fifth Avenue? What? Yes, Saks Fifth Avenue was taken over by private equity. They're on the verge of bankruptcy. Now think about that iconic name. One of the most famous luxury department stores in the United States is literally on the brink of bankruptcy. But people don't want to talk about this because that's just you, quote unquote, internet scaremongers, you bears of foreverness, you forever bears. The truth is, I'm not a forever bear. I think we have a great future if we make the changes. The risk is we don't make the changes and we keep the status quo.
A couple things. So, you bringing up with Melody and the property taxes, it also reminds me of a conversation I had recently with Mitch Vexler and in regards to what's going on in Texas, which you know about that, being the whistleblower and inflating the values of these homes in order to collect more money in property taxes for the school districts.
Been an obscenity in Texas. However, Texas has a problem that Florida doesn't. Everyone says, well, they're both red states. Yes, but Texas has a corruption problem. Now, I'm not going to say Florida's free of corruption. Oh, God, no. We have Orange County and Broward County that are shining examples of what happens when you let it go astray. But Texas has institutionalized corruption. And by not cleaning it up, there's a great risk that Texas will shift to the purple status, as they call it in the political world, and will also have a rebellion against the state officials via the ballot box. And that is something that you can't raise valuations from the government level and say, well, we think your property is worth $700,000, even though all I can get for it in the market is $500 if I tried to sell it. That's not going to fly. And Mitch, he did a great job of outlining this, and all the team has been analyzing this. And I really, truly believe Texas is in a world of trouble ahead. You cannot sit there and basically extract money from the citizenry and penalize them for having private property simply on the basis of the government's estimated evaluation of your net worth. This is something that should scare every American because this is something the Democrats were big on pushing in 2008. Do you remember the imputed tax theory?
No,
Well, during the crisis, Maxine Waters developed a plan where to save the budget deficits that occurred in '08, she got with Nancy Pelosi and they wanted to institute imputed taxation. So if your home or your gold or your stock, whatever investing position you had, was to increase in value, we would charge an imputed tax on the equity in those investments. So if you held gold at $1,000 and it closed the year at $1,500, I'm going to charge you 30% on $500, even if you didn't sell it. If your home went from $100,000 to $150,000 and it went up $50,000, we're going to charge you a 30% tax on that $50,000. Think about the implications on our economy and what they're doing in Texas. It's an imputed tax, and it's the exact same strategy of the left. And it's a scary thought that a quote unquote red state is engaged in that type of behavior.
do you think there's a difference between the left and the right anymore?
Yeah, one small difference. It's societal perceptions. There is no right per se. Full disclosure, Ron Paul libertarian. I left the party in '04. The help Bush did not impress me. Actually angered me more than anything. I have been voting independent ever since. I'll dabble in one party or the other if a candidate that's worth a damn shows up. But to be honest, it's designed, what we're seeing outlined on all the networks and with the political sparring is nothing more than a money grab and to develop ratings. Look at us fighting for quote unquote you. Okay, send me $50. Look at us take on this party here. Oh, let's have a big dinner and raise money. It's to sell influence and make minor nudges on the fringe to the bigger laws. Let's take what's going on with Trump right now. Have you seen any legislation to codify the changes he's been making to any great degree, other than the one big beautiful bill? No. Joe Biden, nothing but executive orders, nothing to codify long term. So when you see what's occurring, it's sparring on the edges. It's not reality. And as long as both parties are making money and have power and influence, the party will go on. It will be up to the markets to correct this situation and introduce a dose of reality. It took 2008 for that to happen. And George W. Bush blew it. We have to destroy capitalism to save capitalism. How can we forget that statement in our lifetimes? Or the meeting with all the world bankers in January of 2009, where deals were apparently cut, where we would sit there and agree to buy all of the mortgage-backed securities back from these banks to preserve the global status quo of the dollar reserve currency. Where are we at today? Highest debt in American history, highest level of national debt ever on a global basis is to scare the hell out of you. We're making Rome look like conservative pikers snipping off the silver. We really have put ourselves in a situation where, well, our debt is your problem, but other nations are beginning to turn their backs on that problem. We'll pay a price for it. I just don't think we're ready as a society to do that, because the austerity that would be involved would be a good 20-30% reduction in the standard of living. I just don't see the individual ready to do that.
I mean, they bailed out the automakers, for God's sake, in 2008. I mean, if that didn't give you an indication of where we were.
Well, government motors joke is still a running joke. And
I never heard that before, government motors.
Yeah, that's what we called GM back in the day. Yeah, it was government motors. And what most people don't understand is it was theft. The Supreme Court endorsed it because it was for the quote unquote greater good. Who lost out on that? Well, everyone who was a stockholder. Big deal. Stockholders lose out on bankruptcies all the time. But who was the biggest losers? The individuals who are bondholders, who are supposed to come first in line in the bankruptcy court, were told by Obama and the administration to kiss off. And they basically seized their private property without compensation. It was transferred over to the unions and to a new investment group to take over the company. That's pretty damn rotten, and not capitalism by any stretch of the imagination. To this day, I always viewed that as a warning that if government, via the corporatist model, decides, hey, you know what? NVIDIA is systemically important because it makes great video cards for gaming computers. Awesome. No, because we use them for AI. AI for whom? Well, for DARPA, for the CIA, for the NSA, et cetera, et cetera. Okay, great. They're systemically important. We're going to take 30% stake in the company with taxpayer dollars. Whoa, wait a minute. Where's that in the Constitution? Where does it say we can buy interests in companies to save companies that can't compete in the open marketplace? General Motors was on the verge of being split up. Toyota was going to buy Cadillac in a heartbeat. That was a done deal. There were companies, we would have still had Pontiac if it was allowed to fail and go into the open market. There would have been buyers. But instead, we said, guess what? We're going to intervene. We're going to quote unquote save jobs. It's the American way. No, it's not. And that's the model we've been using ever since. Picking winners and losers. And that's going to happen in the stock market also. The most I can see happening to the stock market, 40%, 50%. Okay. Then somebody's going to intervene and say, we can't have this anymore. Same for corporations. We want this company to survive because they give great donations to us, left and right. We don't care about this company, so let them fail. And that's the danger. Picking the wrong company to succeed for the future.
Well, and also too, I've said this before, you look at 2008. 2008 is my benchmark because I had just moved to Arizona and I was working in retail banking. And I've told the story a bunch of times, so I'm sorry for the people listening. They're going to hear it again. But for your purposes, for you, John. I mean, I was doing a lot of home equity lines, working on the outskirts of Phoenix. It was one of those towns that it was like Pleasantville, where people couldn't afford to live in Scottsdale and Phoenix anymore, so they moved. Places like Surprise. I was in Anthem. They built a town called Gilbert, Goodyear, Avondale, all these on the outskirts of the valley. And, it was part of the job was to write home equity lines. And, I want to say I was doing upwards of $1 million a month in home equity lines and stated income, as long as the credit score was good. And, you look back on that, and mind you, I was 28 at the time, and wasn't, I was paying attention to it because people would come into the bank and they were just scared. I'd never seen that before. They wanted to take out large amounts of cash and put it in a safety deposit box. I remember thinking to myself, because we had safety deposit boxes there, I remember thinking to myself, I was like, okay, so if the bank's closed tomorrow and you got 10 grand in that box, you're not going to be able to get to it. It's all going to be locked. But back then, the iPhone had just, it was new. There wasn't apps. There wasn't the ability to share information. So in today's world, you can amplify a situation, right? You can turn up the noise and create so much more chaos and make the situation so much more worse with fear than what happened in 2000. I mean, how much worse do you think 2008 would have been if we had the apps and social media today, the ability to share information?
It was available then without social media. People don't remember that. And that's not your fault. It was a different era, a different generation. We did it through instant messaging, so to speak. I was
But it took longer. Not to interrupt you, but it took longer. You didn't have it on the palm of your hand.
No, you didn't have it on the palm of your hand. Well, unless you had a BlackBerry, which I do. I do miss the original BlackBerry. It was a crime against humanity. They got rid of it, but they deserved to go bankrupt. They didn't modernize. The truth is, social media now should scare the hell out of everyone. But what happened 2 days ago? Do you remember? Cloudflare went down. And what did we lose? About 20% of the internet just failed. X, all these different websites. It doesn't take much from a hacker's perspective to take down the information flow. Well, if Joe Hacker or whomever in Pakistan, India, Russia, China, whatever, decides we're going to shut down 20% of the internet or 40% or 50% in America. Well, what happens if the government says, you know what, we're going to have a stock market crash. Let's kill the internet. Retail can't trade. No one ever asked that question. No one ever asked the question, what happens if there's a bank run and we don't know about it? The wealthy take their money out and you're sitting here, I'm going to go to my ATM. What do you mean there's no money available? What are you going to do about it? Who are you going to scream at? You're going to send a message on X or Facebook? Oh my God, look what it says. Who cares? No one's going to care. Your paltry $1,000 in the bank that you think is a solid amount of money in your bank account is nothing compared to somebody with 9, 10 figures and can just sit there and transfer it with the push of a button. And that's the scary part. The big money is always going to be ahead of us, the average guy. So if you don't hedge yourself at home, and it's not Bitcoin, I'll tell you that right now, but if you don't have your own personal hedge, the risk to you, the individual, is very, very high. And I've long been an advocate of something I learned back in the late 70s, early 80s when I was a teenager. If you don't hold it, you don't own it. If you can't physically hold your money in your hand, be it cash, gold, silver, you really don't own it. They can take your paper or digital assets away from you on a whim. Well, I've got $1 million worth of Bitcoin. Okay, the banks are closed. How do you transfer it to functional use? See my point about practicality and engagement and use? You can't do anything with it.
They got an answer for you, John. If you propose that question to the Bitcoiners, they got a response. It doesn't make sense, but they still have an answer. It's just so funny to me.
It's crazy. It's insane. I mean, I think the Bitcoin top was marked around 120 when I saw home equity loans to buy Bitcoin. Seriously. And I said, okay, we're going to see a decline in Bitcoin. And everybody has it coming. And when you're sitting here allowing people to take money from an actual home and invest it in a speculative asset with no hard, fixed, determined value, that's insanity. So we're at the end of the peak insanity phase, in my opinion. And when you were talking about your bank, I remember that, Eric, because I had a friend who talked about it. He said the first thing he did after Lehman failed was he went and he took $50,000 out of the bank and stuffed it in his wall safe. He said it took 3 days to get the money, took it out, stuffed it in his wall safe. He was a Wall Street guy, big guy. The guy I know well, he's on television all the time on Fox Business. And it scared the hell out of me. But I looked at it and I said, you know what? I'm glad I'm not in that position because I know how to deal with it from the schmuck perspective, so to speak. I'm ready for that. But today's society isn't because of our digital dependency, our digital addiction. Everyone thinks that it runs through your phone, through your PC, through your laptop, your AirBook, whatever, your iPad. There's risks to thinking that the system will always remain solvent, functional, and usable in its current structure. And these little hacks that we're seeing, these little attacks on the internet, the air traffic control system, Cloudflare, et cetera, the infrastructure of the internet, they look like nothing more than test drives to me. And I have some background in computers. It doesn't take a lot to take the whole thing down. It's just finding that right needle in the haystack and pulling it out. That should terrify anybody who has a large amount of money in the system.
You think this is much worse than 2008, where we're at right now?
Not there yet, but we still have the ability for the government to make mistakes to make it worse. The tariffs have aggravated the situation. And trust me, if you wanted a full hour of jihad on tariffs, I could go off on that for a long time. But the tariff situation aggravated the economy as it was weakening. So we introduced a minor bout of unnecessary inflation into what should be a deflationary period. The end result of what's going to happen with the tariffs are we are going to have a deflationary episode. Is it tomorrow? No, probably early next year. Deflation should scare the hell out of some people. It should thrill others.
Let me interrupt you a second. So do you see a deflationary period before inflation kicks off again? Is that the order you're seeing it right now?
I think we have a little bit of inflation going into the first of next year. It'll be a lagging indicator, though. We're going to be measuring October, November, and December. But early next year, I could see a deflationary cycle starting to take hold. The Fed was late to cutting. They should have cut over a year ago. They should have anticipated it, but they're using lagging measurement and data tools. They don't have the ability to sit there and make future projections with any degree of accuracy. It's the same as the OMB. No one can predict the future as far as what's going to happen with the economy. Most people don't know. The big beautiful bill was based on no recession for 10 years. The tax cuts based on no recession for 10 years. Biden's Inflation Reduction Act, no recession for 10 years. Have you lived in your lifetime for 10 years without a recession? No. The only period was 2010 to 2020. And the only reason there wasn't a recession is they changed the measurement criteria in 2013. It turns out that we're going to see something similar to the 70s as far as the cycles of inflation and deflation. But this time I think they're going to be more dramatic than ever before. And there's an old saying from a gold bug, inflate or die. And the U.S. government is going to have to inflate or die. This talk about $2,000 tariff checks is pie in the sky until we have a financial emergency. A financial emergency would be outright deflation, 0% price acceleration across the board. So if Donald Trump and the Republicans want to salvage themselves, they probably are going to have to give away $2,000 to everyone, to 65, 70% of the population. Will it make a difference? No, not one bit. We haven't improved housing affordability. We haven't improved car affordability. The distribution of credit is not going to improve. Banks aren't loaning money. We had 47%, I think it was 47 or 43% rejection rates on auto applications. Think about that. Credit is not being shared with the lowest percentile in our society. We're looking at a situation where once credit ceases to flow, deflation is the next logical point. And I can't see them giving credit to individuals with a poor history. Well, say everyone says, "Oh, what's Gen Z?" No, it's the elderly also, the boomers. Their credit is deteriorating severely because their fixed income levels, and that includes, when I say fixed income, everyone thinks Social Security. It also includes their yields and returns on investments, is so low, it's not keeping pace with inflation. They can't afford the cost of living. They can't afford the property taxes, the maintenance costs of their old home in Florida they've been living in for 30 years. They can't afford the groceries. So what do we see? I go to my local Publix. There's a 75-year-old man bagging groceries. There's an 80-year-old man fetching carts. There's a 69-year-old man slicing the bologna in the deli. Why? Oh, they want to work. No, they don't. Hell, we don't want to work now and we're younger. But these old people are being forced back into the marketplace because they can't afford to survive due to the embedded inflation in the system. The only way to correct that is deflation. The problem is that wipes everyone out. It wipes out housing prices. It wipes out equity prices. It creates a new situation that this country hasn't endured since '08. And that was real deflation. And that should scare the hell out of everyone. Will we get to that point? That's up to the Fed and the federal government.
Yeah, and that's where. So when you say that with deflation, I was trying to explain this to a friend of mine who, seems to think that people with pensions or people federal employees or state employees, they'll be able to retire and just kind of go off into the sunset with their pensions. Now, I'm not saying if they're going to be there, if they're not going to be there. I have no idea, but it's not going to be a smooth sail. I feel like that people might think, and the boomers, in my opinion, and you tell me if you agree with me on this, they're going to feel the brunt of it because, to your point, if we're in a deflationary period, houses are going to drop, 401ks are going to drop. If Nvidia and this AI bubble pops, I mean, how many 401ks, pensions, etc., are tied into all this stuff? People don't even realize that they're tied into all this stuff.
Get more scared?
You cut out, John. Every time you start to talk, you're cutting out. So I don't know. Are you muting
okay. That's
yourself?
Okay. It's my microphone every time now and then. I'm trying to mute and unmute it in a timely manner. Sorry about that. I don't think you want to hear me cough or anything. The reality is this. Most people don't understand that the modern pension fund structures and investments that these people are tied into are also investing in the very private equity firms and private capital firms that are loaning money to bananacoin.com or a certain company that allegedly buys a lot of chips from Nvidia, or some foreign company that has part of the circular financing formula for Nvidia. They don't understand that their money is in locations where they just simply see a percentage return on a statement, but it's in danger. And the problem with deflation is you can build a Ponzi scheme as long as it's going up. The minute it comes down vertically, straight line down. Social Security is a Ponzi scheme. End of discussion. A lot of these investment schemes we've seen through the non-financial banking institutions sure look like Ponzi schemes. And if you wonder why Nvidia cracked today, well, people took their profits. They know, okay, we've hit the top. Let's take some money. AI isn't all that yet. Let's take our profits and get off to the sidelines and go enjoy our vacation in St. Kitts or Barbados or wherever during Thanksgiving. They're the smart people. The average investor doesn't have that luxury. Their 401k is tied into this. Their IRA is tied into this. The housing for the boomers isn't that critical because most of them have paid their homes off. North of 30-40% probably. The crucial part is that the individuals who bought during the COVID pandemic, I'll leave that one alone for a while, bought at the top. So if they were to lose 30% of their value and Mr. and Mrs. Millennial or Mr. and Mrs. Gen Z said, I got to sell my house, I've got a job offer in Phoenix, I got to leave Miami, they can't take a 30% hit. They can't absorb that difference. They can't take that kind of pain. So I think for the boomers' perspective, it's going to put them under a lot of financial stress. But from the younger generation perspective, it's going to be greater stress. So averting deflation is going to be crucial for the government. And I don't know how they can do it the way they're playing and picking winners and losers right now. It really has some very large tail risks that we haven't seen since the 1930s.
But if there's a silver lining in John, I could have. I mean, I don't want to keep you all night, but I could talk to you about this for hours. You just have to have you come back on regularly to discuss this stuff. But with that, with deflation, and we're seeing it right now with the subprime auto loans that are happening. That means there's going to be a flood of, say, used cars. There's going to be bargains on the housing, correct? And
Mhm.
would that be same for new cars? I mean, I couldn't believe when I heard the average price of a new car is 50,000. I looked at a Toyota Rav4, a brand new Rav4. It's 40 grand. That is insane to me.
Think about this, though. You can't have deflation if the input costs are still high. So you're going to have areas of deflation. Yeah, a used home, a used car might come down 30%. However, a new home, your costs are fixed as a builder. You're going to have to hold out for something or create these imaginary benefits. Like we'll buy down your mortgage for 2 years, we'll throw in a swimming pool and a big screen TV, and we'll throw a cruise on if you sign today. They're out of qualified buyers, though. Demographics eventually wins every time. And if I'm a 70-year-old person and I've paid my home off and I have enough income to afford to pay my maintenance costs, my property taxes, insurance, et cetera, why would I sell? Why would I get out of it? Why would I go into a higher interest rate environment, even if it's less money, for the remainder of my life? We eradicated the incentive. It used to be mom and dad would sell their home to their kids or give it to their kids via will, transfer of wealth, etc. The kids can't afford the maintenance costs. They're not making enough money. Incomes haven't kept up with the Joneses. So you sit there and say, okay, no big deal. I'll just stay in the home. But in the old days, the old people would transition to a smaller property and then assisted living, et cetera, et cetera. Well, they're living longer than ever before. And now we've set up the ability to come to your home and take care of you through government incentives and Medicare, et cetera. Why would we sit there and get out of that house? I'm comfortable here. Why would I get rid of this property? It's not an investment. That's the problem. We've been treating housing as an investment. We've taught generations that it's an investment. It's a freaking hammer. It's a tool in your toolbox. It's a place to sleep. It's a place to eat. It's a place for protection from the elements. I mean, how many people think a caveman viewed his cave as an investment? That would be zero. It was to get away from the elements, cook some dinner, meet Ugga the woman, and have a good time. You look at a house, there's a difference between a house and a home. A home is what the people make of it. A house is a tool. Well, everyone was taught it was an investment. Because why? Who has an interest in making an investment? People who want to make money off of your gullibility. So instead of building houses for the younger generation, less than 2,000 square feet, 2 or 3 bedrooms, one bath, maybe a garage, small lot of property under $250,000. You know what? If mom and dad can have a McMansion, you should have a McMansion. Well, I can't afford it. I will figure the financing out. Thus the 40 and 50-year financing garbage we've been hearing. It's a nonsensical approach to a practical household item. A house, a car, your tools. Treat them as such. Yeah, if you've got some extra money, get your freaking Corvette when you have your midlife crisis. God bless you. I'm not going to diminish that. I'm not going to say what I'm driving. But if you have that opportunity, you do so. But you got to understand what they are. They're tools. They're not investments. Same for money. Money is a tool. You can't sit there and say money is the end all be all. You have to respect its ability to increase in value, but you can't believe other people have your interests at heart to do so. Most people don't talk to stockbrokers. You talk to a stockbroker, a serious stockbroker, not the robots. They could care less about you individually unless you have 9 figures in the bank. Period. End of conversation. Oh, I've got a $2 million pension. Big deal. We fart that away at lunch. Not a problem. It's gone. Oh, well. we'll make it up on somebody else. It's a serious problem with financial education in this country. About deflation might cure it. People might actually want to learn what money and investments really are all made about and what they really should be doing with it instead of speculating on a meme coin or 5 houses in XYZ, Arizona or Florida.
Well, to me, a signal would be when I talk to somebody that doesn't talk about a car like it's an investment. Oh, a car depreciates as soon as you drive it off the lot. You're like, well, that's not the point. It's like to get you from A to B. I mean, I learned that when I was 16, and I got my first used car. It was to get to A to B. That was the purpose of it. Yeah, okay. If you want to buy a 1965 Cadillac or some, I don't know, Bob Hope Cadillac or whatever, that's different from a collection standpoint. But that's a car is to get you to your destination.
Mm-hmm. I had a friend who's extremely wealthy, and he told me one time is one of the tackiest things I ever heard, and I'm sure it's been repeated many times. So if you want to stay rich in life, stay single. I said, excuse me. Now I found somebody I love, and I love her dearly. So if she ever heard this, she'd probably I'd be sleeping in the garage tonight. But he said, you rent tools. I said, okay. You rent cars, you rent homes, and you rent women. I said, excuse me. And I said, are you serious? He said, look, if you're not going to fall in love and find the perfect person, take your money and invest it properly. Don't sit there and focus on what everyone else is doing. Find that niche that you become an expert at, that you can get some level of expertise, and stay focused on that. So far, we're seeing everybody thinks, well, I'm an expert on crypto, I'm an expert on gold, I'm an expert on stocks, I'm an expert on AI, but they don't look at the big picture, the underlying economy, which drives all this. And I think that's a threat. The lack of financial education on basic economics is the danger that we're facing right now.
You know what the other thing I think is a danger, and maybe we'll end on this, is the idea that people don't have that mentality to. I feel like this country, it would make me feel better if I heard this more. Maybe this is my own little sphere of the world that I'm in. But if people said, if my 401k takes a hit or if my property value goes down, that's okay. We'll adapt. If my kids need to move back in with me, that's fine. We'll do what we have to do to get through this. And I'm not hearing that yet.
That's because we haven't had hard times in this country to really speak of. '08 was the closest we came. You were young, you got to experience. I watched entire companies disappear in front of me locally. I watched people get wiped out daily. I would go to the courthouse and watch the auctions and see homeowners crying. It was a sight to behold. I watched developments get berms in the streets where they took piles of dirt to block the streets off because they couldn't develop them. We thought that the investment from the BlackRocks, et cetera, buying all these subdivisions was going to be great. Now BlackRock is liquidating them. If you're a homeowner and you have to sell, you're selling against someone who has hundreds of billions of dollars on the sidelines that can take a 20% loss. Can the average homeowner take a 25, 30% loss? No. They've got to pay that difference in their mortgage. So it makes the situation even worse, snowballing the deflationary impacts of liquidations. You don't see the societal cohesiveness that we had 30, 40, 50 years ago. And that's the risk that I see as we move forward. The people who are demanding a government-assisted bailout for every mistake they've made in their life versus those who say, just leave us alone and let us do our own thing. And the independent streak is at risk in America right now. I'm hoping that some of Gen Z adopts that and says, you know what, screw you. Let me live my own life and proceed from there. My fear is that we've had a larger accumulation of, well, they got a bailout, I have to get one. And we've lost our cohesiveness as a society as a result. That's pretty terrifying.
That's the direction I feel like we're heading, though. People, they don't like when I say that, but I try to be objective and I look at where the trajectory is going, and saw how people reacted during the pandemic, right? Like, don't take away their Netflix, their porn, weed, Doritos. What else?
Balkanization.
What am I missing? What else do they have to have?
Free internet.
Yeah.
Balkanization. It's the balkanization of our society for profit. If you can't make profit straight up, you divide and conquer the society by economic sector, and you say, okay, these people we can exploit because they have this much income. These people we can control because they have no income. Pretty damn scary.
And also too, you just saying a couple of things you said during 2008. I mean, I've told the bank story, but it was like I saw people's accounts, their checking accounts go down to nothing. Second homes they had to sell, and the other thing too is like where I'm from, originally from Northeast Ohio, and people there they didn't it hit parts of the country harder than others, and Arizona it hit really really hard. Vegas, I have family in Vegas, got hit really really hard. Northeast Ohio it did not, but yet I saw exit ramps off freeways here. They built the ramp, or they built the bridge, but they never finished the ramps in 2008. They just stopped. Eventually finished it, but at that time it just sat there.
Yeah, it's very common where I live in Florida. I was in the epicenter of it also. And when you see what happened in 2008, you say it can't happen again. It can. I think it's going to be a rotation. When I brought up Harvey, Illinois, for example, I think a lot of the older communities that have not modernized their economies are going to pay the price. And those states and those cities, those locations where there has been a flight of population will be the epicenter of societal disruption, of economic pain. And despite the belief that we're going to bring factories back here and renew the 1950s, that's total nonsense. Most people don't understand to move a factory back to the U.S. is a 5-year minimum plan. It's not 1 year, it's not 2 years, it's not tomorrow. So when you say we're going to reindustrialize America, it's a process. It's not instantaneous. When they say they're going to invest $500 billion in America, it's over 30 or 40 years. It's not tomorrow. And you have to start listening and ignoring the announcements and the rhetoric and start analyzing reality. That's the danger. We have too many people that don't want to accept or analyze reality. You understand it. Confidentially, I had a senior VP out of Phoenix for one of the major banks. He was one of my sources during 2008. And what he was telling me about out there was terrifying. And I would tell him what we found out down here. And what we exchanged in the information was this thing is going to crash a lot harder than we thought. Now, everyone who's in those positions is too scared to talk. They don't want to talk about it. They don't want to say what's going on. They don't want to tell you what they're seeing. Why? Major banks are fine. No big deal. But the regional and community banks, the ones where you, I, mom, and dad have their money invested, have their money stored, have a small account, who knows? I think that's where the risk lies, in the regional communities that are on the brink of collapse.
I think the future in Phoenix is pretty bleak, to be honest with you, and I think it's even more bleak in Las Vegas.
Oh yeah, no doubt. Don Johnson from Macro Edge has been highlighting that. We've talked on the radio about this
I
before.
want to get him on. Actually, I keep trying to ping him on X, and he hasn't responded to me yet. But he's somebody I'd love to talk
I'll
to.
drop a line. I'll drop a line. We will be doing a show in December for next year's predictions, just to give you a heads up on Macro Edge Radio. And he will be on that show with me, and we're going to talk about what we see coming in the future along with the rest of the Macro Edge staff. But what he will tell you is what he's seen in Vegas is a dramatic drop off in tourism and employment that hasn't been seen since 2008. And I think the risk there is they've destroyed what made Vegas Vegas. They've overbuilt it. They've provided less bang for the dollar. And as I've said to a million times, I live in Florida. Why would I fly 3.5 hours to Las Vegas, 4 hours maybe, when I can fly to Aruba, get treated better, get just as good, if not better food, and have a beach to go out on? There's alternatives now. And Vegas failed to adapt to a world in competition. Now they're going to pay the price. They have no other industry. They have no other fallback. And I think that price they're going to pay is going to be pretty severe. It could end up being the Atlantic City of the desert.
Well, let's take it a step farther, right? And this, my family lives there, and I talk to them, and I'm like, God, you're not as pissed off as you should be about Las Vegas. Young people can't afford to go there, right?
Mm-hmm.
Every city almost every city, if not all of them in the United States now, has casinos.
Yeah.
Also, sports betting, you could do that on your phone. So, fantasy football, all of it, you just go to your local bar on Sunday or whatever day and in the neighborhood and you do whatever you want.
Now think about that. Why have we spread the opiate to the masses? Why do we have legalized weed everywhere? Why do we have legalized gambling everywhere? We need a distraction for something bigger. What's bigger, we don't know yet, but it's coming and it's going to happen.
I saw Michael Guyhead wrote earlier today. I'm paraphrasing, but he said, are they really going to crash the stock market to prevent the Epstein files from coming out? Which I thought that was interesting.
That's a little insane. No, actually, there's better odds of being in a bomb shelter in Caracas than of the market crashing because of the Epstein files. If anything, I wouldn't want to be Maduro right now. It's a very bad situation to be in.
So, where are we at here, John? I mean, is the future bright? Is the
It's potentially brighter than it's ever been. The primary issue I see is we either have to readopt actual free market capitalism, move the government aside, allow prices, despite the pain it will cause for a year, to settle back to normalcy, to reality, or we will be a hybrid version of Argentina, South Africa, and France. And each region of the country will have their own version of an economy instead of a unified national economy. And that should scare the living hell out of everyone. Because you see what's going on in Argentina, say, well, look at the job he's doing. They're bragging about 40% inflation, for God's sakes. And that's a reduction to 40%.
talk about the fake it till you make it model right now.
Yeah. Or South Africa saying, look, we're doing better than ever. Did you have gang warfare openly on the streets? You have walled off cities and a divided nation by tribe. And then you talk about France, which attempted to import all of its workers and instead destroyed their culture and their history. All of these aspects are things that we could see in our own country pretty quick and pretty easy. And it doesn't take a lot of imagination to see that happening. You see it in Phoenix. You see it in California. You see it in Texas. It doesn't take much to trip that wire over. We have a bright future if we embrace the technology, we quit the idolatry of charlatans, and we focus on building a capitalist future versus a corporatist future. That's the threat. If we allow the government to take over the economy, they'll never let it go until it collapses.
But that's the problem with it all, because the government's they're not gonna turn that over, and that's where I'm not optimistic of things, because the tighter the grip, they never relinquish it back.
Thus my concerns. Control is a very hard thing to relinquish. We really do face a risk of going over the precipice right now. And the problem with our society, as has been stated by many others, with the technology available at our fingertips, the threat of a technocratic, centralized government-controlled society would make East Germany look like a piker compared to what we're capable of doing. And there's a history buff thing, because you were young when the East Germany was a big thing. But if people read about the Stasi, read what happened in East Germany, it would terrify you. And that was a simplistic, low-tech situation. Imagine it with high-tech, with cameras everywhere, cars tracking your every move, phones tracking your every move, your every purchase, and the ability to limit movement and what income you earn based on your beliefs, your statements, your social media score, or whatever. That threat is realistic. So we have a choice to make in the next few years. I'm just not sure which way we're going yet.
Have you ever thought about leaving the United States?
Yes.
Where would you go?
Absolutely. We've been looking in the islands in the Caribbean. We're just shopping. We're thinking about it. We're still considering retirement on a sailboat also. We're just not sure where to go yet. We have family obligations to finish here in the States, but when my mother-in-law reaches that age of unfortunate when she's no longer around, we have entertained looking overseas. We looked at Ecuador; it blew up. That one blew up in our face. We almost bought a place down there. We've heard about Portugal, not now. It's turned into a nightmare in Europe. So really, it's just shopping the right island where you can get a dual citizenship and basically have freedom of movement and freedom of capital. Yes, you'll still have to report to the United States. You'll still have to file, but there are ways to sit there and balance that out.
What about El Salvador? What are your thoughts on what Bukele's doing?
I want to see him do more. He needs to develop more industry. He needs to develop his economy a little bit more. He has the potential of turning that into a parallel to Panama. Panama is a huge location for expatriates to retire and reside in and conduct business. I've interviewed some people down there. My brother-in-law lives down there. It's nice. It's not my cup of tea. I like my beaches and my pina coladas and all the other crap that goes with it. But the reality is he has the potential. He has to exercise it. And he could do it. I just want to see how it progresses the next 2 or 3 years.
John, where can people find you?
JohnGaltFL.com. And that's my blog that I've had for going on 19 years now. Also, I'm on Macro Edge Radio, and that's macroedge.net. We do a Friday night show almost every Friday night. We have some fascinating guests. We've had some excellent guests throughout the years. We've been around for a couple of years doing this. We decided to do it and give X Spaces a try. We've had some great successes, and then we've had a lot of X glitches, which is why Zoom seems so much better. I have to admit that. But we do a show every Friday night, usually at 8 p.m., but we will make accommodations for Asian guests, etc. So we do have a flexible schedule. Just check us on our X feed for Macro Edge to find out more.
And tomorrow night is Ed Dowd, right?
Ed Dowd Friday night, which we will probably cover everything from the technology sector to markets to what's happening in the political economy, because his discussion about that is fascinating if you've ever heard him. And the political economy, everyone says, well, you're talking politics. It's not the same as politics per se. It's the influence on economic activity from a political point of view and how that's being integrated into the future. I think he's going to have some great perspectives on that. And that's why I want to hear it, because unfortunately, as you and I just discussed, the risk of a greater change than is necessary is there now by putting too much power onto one side of the scale. And that's your fear and mine, that the centralized government takes over too much power.
Yeah, I've had Ed on here a couple of times, and whenever I see an interview with him, I tune in. Him and the other one I tune into as much as I can when he's out there is Luke Groman.
Oh, Luke is fantastic, and he's actually nailing the currency war right now, just like Jim Rickards does. They both have fascinating perspectives on this, and the currency war that we're seeing at this point in time is expanding, where people are trying to diversify away from the U.S. dollar. And it's hard to escape it completely. But if you can develop some degree of independence by taking gold as a central reserve, Bitcoin in some cases, but only for short-term storage and transitional purposes, you can escape by setting up a separate economic model away from the U.S. Russia demonstrated it. China's working on it. We should be paying more attention to it, as Luke says, but we're not.
Yeah, he's coming back on in January. Ironically enough, we went to the same high school. Shows you how small world it is.
That is small world. That is very small world. That is incredible. Yeah, that is sort of funny.
It's hilarious. And we spent an hour before we even started recording, and I was just talking about this person, that person, this. It's just so funny. And small world.
That is fascinating. Absolutely fascinating. But yeah, if you have any questions, drop me a line, and I'll talk to Tom, see if I can get him on your show for you, because he would love to talk about it. He's very good at broad economic focuses, and while I'm more the historian of the group, which bores people to tears, but I can find some names that'll make you cry and say who. But he is more of the big macro guy, can really provide some great input and insights as to what's going on with the U.S. economy.
Great. Well, I look forward to your show tomorrow night with Ed, and I appreciate you taking the time. And for those that are watching, listening, I comment on YouTube, Rumble, all my audio, Apple, Spotify. I read all the comments. Give it a like, thumbs up, share, and for people on Substack, if you consider becoming a paid subscriber, I put everything up early for my paid subscribers. So, John, thank you so much. Great conversation, and I look forward to hopefully many more ahead.
Thank you very much, Mike. You have a great evening.
You too. Mic drop.